You thought market volatility was an accident. It was not. The panic was profitable. The chaos was calculated. The red lines on your screen were an accumulation window. Most people believe global financial cycles move like the weather. Unpredictable. Chaotic. Crucial structures breaking under sudden pressure. You watch the headlines flash across your screen. The bold fonts. The screaming percentages. The urgent tone of a television anchor declaring an overnight collapse. You feel the physical reflex. The tightening in your chest. The sudden impulse to open your tracking application. To protect what little capital you possess. To exit before the floor drops lower. You click the interface. You confirm the transaction. You step away from the desktop. You think you saved yourself. You did not save yourself. You executed a planned behavioral script. Your liquidated position did not vanish into empty digital space. It was instantly absorbed. Not by a panicked human observer. By a silent institutional architecture waiting for that exact allocation boundary. The system did not break during the drop. The system operated with absolute precision. The volatility was not a structural failure. It was a narrative liquidity injection. An automated mechanism designed to separate emotional human capital from high-value infrastructure assets. The ledger was never blind. It was simply waiting for you to look away. Step inside a high-frequency infrastructure layer introduced during global crisis stabilization. A facility containing 0 physical trading floors. No shouting personnel. No paper receipts. Only rows of cold server configurations drawing power from independent power grids. These systems do not read balance sheets. They do not evaluate product utility. They monitor you. They scrape global sentiment data streams. They analyze the structural deceleration of your scroll speed. They measure the exact duration your eye focuses on an alarming headline. They calculate human panic thresholds with mathematical certainty. You still think this is about simple economics. The mechanism relies on a single fundamental contradiction. The public is taught that markets reward patience, strategy, and analytical discipline. Yet the entire digital interface is engineered to reward high-velocity panic. Every notification is a deliberate cognitive interruption. A prompt designed to break your long-term focus. The red color configuration of an asset drop is not an aesthetic choice. It is a universal psychological trigger. It demands immediate physical reaction. The interface was never an objective window into global value. The interface is a behavioral control mechanism. The product was never the asset itself. The product was your reaction to the chart. Consider an institutional investor associated with permanent global acquisitions. They do not buy when the economy is stable. Stability is expensive. Stability offers minimal arbitrage margins. To acquire substantial infrastructure at a discount, the architecture requires localized disorientation. It requires a synchronized narrative shift across major distribution channels. The public must believe that a specific economic sector is permanently compromised. The headlines must sound absolute, final, irreversible. The panic must feel organic. But the accumulation grid is entirely systematic. When the retail market liquidates its positions during an engineered volatility window, it creates massive sell-side liquidity. For a massive institutional pool to buy millions of units without driving the price upward, they need a matching wave of desperate sellers. They need you to sell. They need you to believe that holding on to your position is financial suicide. Your fear is their necessary transaction counterpart. Without your panic, their multi-billion-dollar accumulation grid cannot execute. They do not force you to sell. They simply create the environmental conditions where selling feels like your own intelligent decision. You were supposed to trust the interface. That was the design. Look at a heavily stained, half-shredded paper ledger balance sheet recovered from a decommissioned archive vault. Decades ago, this process required physical coordination. It required closed meetings, manual accounting entries, and delayed press releases. The mechanics were slow. The tracks were visible to anyone tracking the ledger entries. Today, the analog paper has been replaced by predictive trading suites. The modern echo of this system runs on automated execution scripts. These models do not wait for the news to break. They write the news. They automatically deploy algorithmically generated press releases the exact microsecond a preset pricing threshold is breached. The human participant cannot compete with this velocity. You are reading the headline when the transaction has already concluded. You watch the synchronized drop. You believe the entire world is losing capital simultaneously. But wealth does not disappear during a market contraction. It merely changes legal custody. It migrates from uncoordinated personal accounts into concentrated corporate reserves. The screen displays a global loss of trillions of dollars. What it actually shows is the massive repricing of global assets. The assets are still there. The real estate exists. The technology functions. The infrastructure remains intact. Only the ownership ledger has been altered. The panic wasn't accidental. It was a mandatory clearance protocol. Every 24 months, the narrative cycle repeats. The specific catalyst changes. Sometimes it is an unexpected regulatory draft. Sometimes it is a sudden institutional restructuring. Sometimes it is a manufactured liquidity crunch inside a secondary banking system. The details are irrelevant to the core engine. The underlying architecture remains identical. The system creates a temporary state of artificial scarcity. It triggers the universal psychological survival reflex. It forces the uncoordinated crowd to abandon their long-term security for short-term relief. That behavior was rewarded by the system for a reason. While you adjust to the new economic reality, the quiet accumulation phase ends. The institutional positions are fully set. The narrative channels suddenly pivot. The tone of the screaming headlines shifts from absolute catastrophe to cautious recovery. The bold fonts on your screen turn from alarming red to stable green. You open your personal tracking application once more. You see the numbers climbing. You feel a sense of relief. You believe the danger has passed. You consider entering the market again. But the asset is no longer priced at the bottom. It has already been revalued. To buy back into the system, you must now pay a premium. You must buy the exact same asset you sold under pressure, but at a significantly higher execution price. The difference between your panic sell price and your relief buy price is the invisible tax of the architecture. It is the silent fee extracted from your human labor hours. A fee you paid voluntarily because you believed the chaos was an unscripted anomaly. You are not an investor inside an open marketplace. You are a participant inside a calibrated cycle of wealth rotation. Every transaction leaves a digital blueprint, yet the architecture hides the blueprint in plain sight behind flashing data grids. Your tracking app displays your balance, but it hides the systemic ownership metrics. You see numbers increase and decrease while the underlying infrastructure remains firmly held by institutional custodians. The game is never designed for you to win the infrastructure. The game is designed for you to lease access to their network. The network engineers control the access keys, the narrative feeds, and the execution speed. Your analytical tools are deliberately delayed by milliseconds. Those milliseconds are where the entire corporate profit margin exists. You are analyzing history while they are executing the future. This pattern is not limited to capital assets. The exact same infrastructure architecture controls your daily attention metrics. The system engineered the financial news stream to induce psychological paralysis. When you feel paralyzed, your processing efficiency drops. Your reliance on external corporate structural guidance increases. You look for institutional authority to tell you when the panic is over. You wait for the corporate system to give you permission to breathe. By the time that permission arrives in the form of a market recovery headline, the wealth migration has already completed its legal path. The ledger entry is locked. The compliance mechanism has secured your behavioral cooperation for another economic cycle. You will return to your daily employment grid to generate more digital capital. You will deposit that capital back into the same institutional framework. You will monitor the same interface. You will wait for the next red day. The architecture will remain ready. The automated sentiment engines will continue scraping your behavioral responses. The servers will remain powered by independent grids. The narrative scripts are already archived for the next global stabilization window. You still believe this is a free marketplace where individual choices determine survival. It is not. It is an enclosed behavioral architecture. The architecture tracks your continuous dependency loops. It maps your spending patterns against your emotional exhaustion periods. When you are tired, you accept the systemic transaction costs without question. The interface minimizes friction precisely when your cognitive resistance is lowest. This is how the modern institutional engine ensures a perpetual flow of human energy into its private reserves. The red charts, the urgent alerts, and the sudden volatility windows are just levers. They are operational tools used to maintain system equilibrium. The public must remain in a state of rolling disorientation so they never look past the screen to analyze the real structural foundation. The asset pricing model is completely separate from real-world utility. It exists purely to measure how much pressure the human network can sustain before liquidating its collective future. You have lived inside this design since your very first digital transaction. Every automated recurring bill, every biometric payment confirmation, and every panic-driven asset liquidation was scheduled on an institutional timeline. The framework does not require your understanding. It only requires your immediate sensory participation. The mechanism functions because you believe you are an independent agent reacting to random events. The moment you realize the events are choreographed is the moment the illusion losing its power. But the system has already accounted for your sudden realization. It has already built an analytical category for your skepticism. It monetizes your suspicion. The system did not collapse. It adapted. Most people never see the mechanism, only the outcome. The ledger was never cleaned. Another entry already exists.